Hello traders, you're welcome back to the Forex Geek channel. Are you struggling to find accurate breakout entries? The Trend Direction Force Index is an effective indicator that helps traders spot strong breakouts while filtering out false signals. So in this video, we are just going to be breaking down how this indicator works and how to use it to trade breakouts with confidence. If you want to learn proven trading strategies and high accuracy indicators, make sure to hit that subscribe button and turn on notifications, okay? Now let's just quickly get into it. I'm going to start by adding the Trend Direction Force Index. The Trend Direction Force Index. Let's add this to the chart. Okay. So the TDFI, which is short for Trend Direction Force Index, is a momentum-based indicator that analyzes the strength of price movements. It also analyzes trend direction and breakout potential. And finally, it analyzes market momentum for strong entry points. So this makes it one of the effective tools for identifying powerful breakout trades. Okay, so let us quickly go over the key signals traders should look for when using this indicator. Okay, all right. Now, for positive values, that indicates when the indicator presents positive values above the zero level, right? Positive values indicate strong bullish momentum. You can see that when the values were positive around here, we had a significant buy trend, right? You can see that there was a bullish trend prevailing at the time. Okay, so positive values indicate strong bullish momentum, confirming breakout to the upside. On the other hand, negative values, when the indicator drops below the zero level, negative values suggest strong bearish momentum, signaling a downside breakout. Okay, and then divergences occur when price makes a higher high. For example, let's see if we can find such. Okay, when price makes a higher high and the TDFI fails to confirm. Okay, so if price makes higher high but the TDFI makes lower high, then there is a chance of a potential reversal. Okay, it could indicate a potential reversal. So by understanding these signals, traders can avoid false breakouts and enter high probability trades. Now, to get the most out of the TDFI, here are the best settings and strategies. You can use higher time frames such as the 1 hour, the 4 hours, and even the daily for stronger breakout confirmation. Okay? For stronger breakout confirmation, you can use higher time frames. Okay? Then combine with support and resistance levels for better accuracy. All right, you can also pair with moving averages to filter out weaker trends. All right. All right. For added confirmation, you can also decide to add RSI or MACD just to verify breakout momentum. And you can even add a volumes indicator for volume analysis to confirm whether price action is supported by real buying or selling pressure. Basically, you can use other technical indicators to confirm prevailing momentum, to confirm signals given to you by the TDFI. Okay, it's very important. All right, so the signals are quite straightforward. Whenever you have a green dot appear and then the indicator line turns green above the zero level, it's a buy signal. All right, when you get your confirmation, you can enter a buy trade, set your stop loss below the previous swing low and target resistance zones for your take profit. Okay, then for a sell, when a red dot appears and then the line changes to red below the zero level, that's a sell signal. You can enter a sell trade after you get your confirmation, set your stop loss above the previous swing high, and your take profit can be at support zones, right? So even when using this indicator, ensure that you pay attention to risk management. Okay, do not trade with an amount you cannot afford to lose, and do not risk more than 2% of your account balance in a single trade. All right, you want to make sure that your capital is preserved at all costs. Okay, capital preservation is paramount. So ensure that you do not over leverage. All right, ensure that you do not over leverage. So while the trend direction force index is an effective indicator, risk management is key. Okay, here's how to avoid unnecessary losses. Ensure to use stop loss orders below key support levels for a buy trade and above key resistance levels for a sell trade. All right, and also avoid entering trades during high impact news events. All right, when you are when there is an ongoing high impact news event or an upcoming high impact news event, you might want to stay out to avoid, whipsaws, to avoid getting caught in the midst of intense volatility. All right. And then you can stick to breakouts that align with the overall market structure. Okay, so pay attention to market structure. It is very important. Okay, the direction force index is one of the breakout trading indicators that you can take advantage of for confirming trend strength and momentum shifts. Okay, if you are looking for a way to trade breakouts, this indicator is an effective indicator that you might want to consider having in your trading toolkit. Okay, it is beginner friendly. It gives clear signals, both buy and sell signals. All right, and it can be used by any style of trader, whether you're a swing trader, a day trader, or even a scalper. So if you found this breakdown helpful, hit the like button, drop a comment below, and let me know how you use this indicator in your trading. Do not forget to subscribe for more powerful trading strategies. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.